Welcome to our Introduction to Accounting. My name is Professor Larry Louie, and I will be guiding you through this video, which will precede some work we do together in the classroom. So accounting and financial reports are the language and scorecard for business. This is about the process, like how does accounting work? So we'll look at accounting process and kind of build it up from bottom up. We have transactions. Just think of these as pieces of paper. They could be sales, purchases, rent, payroll, equipment, inventory, all kinds of things have paperwork that's generated. We put those into an accounting system if they are accounting transactions. Some pieces of paper are not transactions. So we put them in an accounting system where we record entries, then we summarize the balances, we make adjustments to conform with GAAP, and then we close the books, and then we report using that status of the accounting system. We call it the trial balance. And those statements are the four we've been seeing: balance sheet, income statement, shareholders' equity, and cash flow. So this is the general high-level view of accounting process. From transactions into the system, and out of the system comes reports. All right, you'll remember this. This is the accounting equation. The assets we have, we paid for, liabilities, or by shareholders, right? That's the accounting equation. And you've seen it, I don't know how many times at this point, but bear with me, we're going to see it a couple more times. So we have this accounting equation here in blocks of assets equals liabilities and shareholders' equity. From looking at the balance sheet, we saw that assets are things like cash, inventory, buildings, and equipment. Liabilities are things like accounts payable, taxes payable, or loans payable. And shareholders' equity includes things like common stock and retained earnings, right? Just general refresher on what we just saw on the previous video. But then where's the profit? So what we want to look at is inside shareholders' equity. You recall that it has contributed capital, like common stock, but it also has retained earnings, which includes profits. So, that's where it is. So we see that the balance sheet is the balance sheet, but inside the balance sheet, specifically inside retained earnings, we see a referral to the income statement because it shows net income. So that's a very important thing that we're going to take advantage of in a moment, right? So now we can do some accounting. So traditionally, we use a process called debits and credits. Some of you may have taken accounting in your past, and you probably remember this with dread and headaches. But I have found over the last 20 years of teaching accounting that even though I'm very familiar with debits and credits because I was a CPA, I don't need that level for you. In fact, it's harder to learn using debits and credits than a different method that is called either the spreadsheet or template method. So I can teach you the fundamentals of accounting without ever using debits and credits. Now, if you're familiar with it, don't think of it as wrong. It's certainly not wrong. It's just that you don't need that level of terminology and learning how those entries work, because the spreadsheet is much more intuitive, which I'll demonstrate in a moment. So we could change this whole accounting system into a spreadsheet that has columns and rows. And it looks like this. And notice that it just reflects the formula. Assets on the left equals, that's that blue vertical bar in the middle, liabilities plus equity. So think about it as if we enter every single row representing a transaction, and each of those rows balance, that we're actually kind of doing it properly. I'll explain what balance means in a moment. Then as we accumulate all those rows, we get to the subtotals of all those accounts. And that is what an accounting system does. Now, real accounting systems are databases, and we do the entries in the database, and then we summarize the status of the accounts inside the database. But in our simple mind and a much more simple tool of Excel, we can mimic the behavior of an accounting system. So you might say, well, that's good, but where's the profit? Well, I gave you a clue on that a moment ago, but now we have to show how does that work on the template. And it works like this. The income statement hooks into shareholders' equity through the retained earnings account. And so the spreadsheet has to have that as well. So in the blue section, we see the accounting equation, asset equals liabilities and equity. On the right side, we see in a different color, green, income statement. And then that one total of net income goes from the income statement and updates the retained earnings account inside the balance sheet. So now we have combined the accounts that are either affecting the balance sheet or the income statement, and then our accounting system on a spreadsheet now has integrity, right? Now we have something that could actually function like a real accounting system.